here's the chart of gold. Gold and silver are clearly in parabolic move. Silver more so. When you enter the territory of ballistic parabolic moves, it becomes very risky. Very risky. It's absolute fun. It's wonderful to see your account growing day after day. Sometimes like every few hours it notches higher. That's great. But the risk is huge. The risk is huge. If you study history, you see parabolic moves can go on for quite a while. But when they have that correction, the correction could be so painful if you are loaded with margins or you are basically oblivious of any stop losses, etc. I want to be very clear. The move in silver, and I'm going to base everything I say on silver because I think silver is really the most explosive of the two, gold and silver. Silver, in my opinion, is an absolutely historic move that will go on for years. Forget about silver going down to 20 or 30. This is nonsense. I don't think it's going to happen now. Forget it. But silver going from 100 to 60 in a matter of 4 or 5 days, yes, this could happen. And how it could happen? You'll have margin, basically avalanche of selling because margin calls, yeah. But it will not stay at 60. It will not stay at 70. It won't stay there maybe, I don't know, 1 hour, half an hour, the time that, deep pockets investors think about central bankers and lots of others are just waiting for that. And the market, and it will jump back up. It'll jump back up. So that's what I think is the risk now for those who are sitting on a lot of margin money. You must have tight stops. I keep saying it every video. I tell you, the higher it goes, you have to adjust your stops. You don't adjust your stops. You enjoy the fun without taking precautionary measures. Not a good idea. Really not a good idea. You worked hard to come that far, to accumulate all that nice profits. You don't want to give it away because you're going to have basically a flash crash of 3 or 5 days. It'll be terrible. Okay. This is spot gold 2-hour scale, and it's a stretched, if you like, fifth leg. If I'm getting it right, we are in a 1, 2, 3, 4, and that's our fifth. Okay, so out of that fifth, we got the 3, the 1, 2, and possibly 3 is in place. We're going for the fourth, which means we're going to push higher for the fifth, and that could be it. That could be it. So short term, I would say if it drops under 4,747 and you are still long without any stop, that's a bad idea. That's a bad idea. You want to have some stop at this level. Because if it goes for a fourth wave and then it goes up for that fifth, it's probably not going to break this level. You can adjust it the way you like for your risk profile. You want to put it slightly higher, slightly lower. Slightly higher I wouldn't do if you are keen to stay in. But this is, in my opinion, the minimum you should do. I mean, you have to go with a stop loss at least 4,750, 52 or something. That's the cash basis spot, yeah. And after we get that 4 and 5th, I'm going to come back and raise my stop. I mean, once we get the 4 done, if I'm right, and it keeps pushing higher, I'm going to come back and raise my black line here to a higher level. Palladium keep pushing higher because in their wave count, they still have to finish that 5th leg. And silver, with silver, you can expect anything. Yeah, anything. But I do see also a potential in silver that we are reaching a point where the wave count, the breakdown of the wave count, we could see it in a sec, could signal a reversal is coming. On top of it, we have cyclical studies pointing to a possibility of a top end of January, early February in precious metals, and then extensive correction. So take all these things into account. I'm going to look at silver right here, and silver coming up on the 2-hour scale, normal scale, not log scale. Okay, we are in a 3-4, and we are going for the fifth. So far, I'm working with this being 1, 2. That gives me 3. That gives me 4, and that's the fifth. Could it extend? Yes. It relates to this, you see. But I would say outright, you don't want to consider staying long. Definitely, if it breaks 90, I would say flat 90, the cash, yeah. It breaks 90, you want to have either have taken some of your profits, all of your profits, put some stops, whatever you want to do. But don't be without stops or any plan what to do if it breaks 90. If you want to be even a sharper shooter here, you go for 92.5. Because if I'm right that that's the end of the fourth wave, yeah, this tiny fourth wave, then once it goes down there, that's already a sign of weakness, yeah, weakness that could lead to eventual capitulation, to an avalanche of margin calls. Okay, so again, keep very, very sharp eyes here on this movement. When this looks like, okay, well, it's manageable, but it doesn't look so manageable when you go to a weekly scale. Look, how many times have we seen such a thing? I bet not many times. How many times? Look, this is a parabolic move. It's totally ballistic. And the nature of these moves is such that there comes a point that they reverse, and they reverse very sharply, and the fall is terrible if you are not prepared. So don't let this happen to you.